When we invest, we are expecting our money to grow and earn us a return of some sort over time. But unfortunately, no one can truly predict the future with 100% accuracy. Since this is the case, when we put our money into something with an unknown outcome, are we actually investing or are we speculating that the value will increase? So then what's the difference between speculating and investing? And how do you make sure that you're actually investing and not speculating so you don't lose all of your money? We'll cover all of that and more in this video. Hey, I'm Jarrad with an A, and on this channel, we talk about all things personal finance, investing, and financial independence. Let me be clear up front. You can make money speculating, and you can also make money off of investing as well. The difference between investing and speculating lies within the amount of risk that you're taking by putting your money into something. Risk is a tricky one though, because all investments come with some sort of inherent risk. If there was zero risk and a guaranteed return, then everyone would be putting their money into it, right? And we do. Savings accounts are the perfect example. Before money is put into the account, the bank has told us that they guarantee a certain return on our money. They even have the option to change that rate over time if they need to. The reason they can guarantee this to us is because they are 100% certain that they're going to be able to earn a higher return that'll cover the interest that they pay us by using our money for themselves. The risk is so small, therefore the returns they give us are super small as well. Most of the time, our return doesn't even keep up with inflation, so technically we're losing money when it's in the bank. But this is the price that we pay for the zero risk rate of return. Our money isn't going to grow, but it's going to be safe. For the most part, when you invest in something like stocks, bonds, index funds, mutual funds, and REITs, and you plan on holding them for a long period of time, you're taking on low to average risk. By long period of time, I'm talking about 3 to 5+ years. Within each of these asset classes, there are additional levels of risk depending on how that asset class produces a return. But when you buy and hold them, you're not speculating that the price will go up in a short period of time. We'll talk more about the additional levels of risk and how to spot a speculative investment in a second. Just a quick summary. Investing is when you buy and hold an asset for a long period of time with average to low risk. Speculating is when you buy and hold an asset for a short period of time with a higher risk. Since there's a little bit of gray area with speculation, we have 3 ways to determine whether or not an investment is speculative. The first is with what goes into valuing the asset. How is that asset going to turn a profit, which in turn will grow your money? The example that we're going to use for this part is a cryptocurrency like Bitcoin. Crypto investing has become so common nowadays that I figured it would be easy for everyone to understand. I made a comment in passing within a past video about how Bitcoin is speculative and technically not an investment. Now, I had a few people get a little butthurt and flip out on me a little bit. It made me realize that there's a lot of people who have no clue what they're doing when putting money into something like that. So I figured that it would be the perfect example to explain why right here. We can't deny that Bitcoin has value because it does. It's a currency that can be traded for goods and services. But that doesn't make it a non-speculative investment. It makes it money. Just like these $100 bills that I have right here. For something to be an investable asset and not a speculative asset, we need to look at if that asset produces anything that will in turn increase its value. In the case of something like cryptocurrency, it doesn't produce any additional value beyond the current market price. The current price of 1 Bitcoin is only determined by supply and demand. That's the only way the price goes up or down. Outside of this, the only way the price would go up or down is if additional Bitcoin was created. At this point, there's only 21 million Bitcoin out there in the world right now, and there's most likely not going to be many more created because it's very labor intensive to mine Bitcoin. Because of that, when you quote unquote invest in cryptocurrency, you're speculating that the price will go up because there is no real way to evaluate the true value of the currency. If we look at a company like Apple, we can make a sensible argument as to whether or not the value of the company will go up or down and why, which in turn would increase or decrease the price of their stock. If they release a whole new product like the AirPods, we can expect sales to increase. If they release a new groundbreaking feature in their iPhones, then we can expect sales to increase. the value of Apple will in turn go up because it's based on revenue from a real company that actually sells products and services. If you enjoy this video, then please Hulk smash that thumbs up button. It's a great way to help support myself and this channel and my dog Molly. The next way to determine whether an investment is speculative or not is based on the amount of time that you plan to hold it. We could take any good investment like an index fund and turn it into a speculative investment by buying and holding it for a short period of time. In this case, you can think of something like day trading. That's where you buy an asset like a stock with the intent of selling it very quickly. Someone who does this is trying to make money based on those slight increases and decreases that we see on the stock market on a daily basis. Since the stock market is so volatile in the short term, when you only plan to hold something for a short period of time, you're automatically introducing that volatility into your rate of return. It's very difficult to successfully make money in the short term. When you hold an investment for the long term, you're less concerned with what it's doing on a daily basis because you're introducing a longer time horizon. The more amount of time that you add to this equation, the less you'll even notice those constant ups and downs seen in a short period of time. Think of it like looking at the ocean from above. When you zoom out far enough, you don't see how choppy the water actually is. But if you zoom in a lot closer, you can see the waves and how it's constantly moving up and down and back and forth. The next way to determine whether or not an investment is speculative is with how risky an asset class is based on the nature of what it does to produce a profit and also its size. As I already said before, Bitcoin is very risky because it doesn't produce anything of value. Now, what about something like a stock that's tied to a company that produces products and services? For this example, we're going to look at small and mid-sized companies whose stocks are traded on the stock market. Now, these are usually referred to as small cap and mid cap companies and would be considered speculative investments. Not at the same level of speculation as something like Bitcoin, but it's still on the same spectrum. The smaller a company, the more risky it is to invest in. The main reason is because of the fact that it's not as established as a large company like Amazon, Home Depot, or Verizon. Their size at this point is limiting them from being considered a stable business that's going to be around for many, many years to come and produce profits on a consistent basis. But just because it's smaller doesn't mean it's not a good company to invest in. It just means that it's a lot riskier because we don't truly know how they'll perform in the future. We know that for a large company like Amazon to go out of business, it's going to take a long time since they're well established and have multiple streams of revenue. If you think about it, all of today's large cap companies at one point were considered to be small or mid-sized companies. Over time though, they've expanded their businesses, offered new products, services, and have positioned themselves to be successful going forward. It's fairly risky to invest your money into a smaller company because we don't know which ones are going to be the next Amazon, Home Depot, or Verizon. That's why it wouldn't be a smart idea to put all of your money into a small or mid-cap company or index fund due to the high level of risk. Most people are going to have more money in large cap stocks or index funds and just a little bit of their portfolio dedicated to something like those small or mid-sized companies. There's nothing inherently wrong with doing some sort of speculative investing as long as you truly understand the risk that you're taking. You should be okay with the potential of this money going to zero due to the high risk that's involved. The only suggestion that I would give is to make sure that the amount that you invest isn't a large portion of your overall investment portfolio or net worth for that matter. I've seen people put all of their cash into Bitcoin expecting to get rich really quick, and it doesn't end up very good. Personally, I would not invest more than 1 to 2% after I've built up a nice established portfolio utilizing tax-advantaged accounts. If you want to know when to invest in certain investment accounts, I'll throw a link in the description of the video that I made on that topic. To be transparent, I'll probably put a little bit of money into Bitcoin at some point in the future, but it's going to be a very, very small amount that I'm willing to lose. And I'm also going to buy it the real way as opposed to going through an investing app like Robinhood or Cash App. Watch these investing videos to your left next that I put together specifically for you. Check out the description for more resources and playlists to help out with all of your personal finance and investing needs. Make sure to Hulk smash that thumbs up button. I'll see you in the next one, friends. Adios.